Let's talk about China now. Given the opportunity there, you have the industry perhaps going to $17 trillion by 2030. That's for the asset management market. What opportunities there are then for Pimco compared to other parts of Asia, for example?
China is absolutely a key area of focus for us and undoubtedly a big opportunity for asset managers and certainly for Pimco. We view it as both a business opportunity as well as a strong investment opportunity for our clients. So importantly on the investment side, especially with what we think is the pending inclusion of China bonds into fixed income indices, our emerging market clients, our global clients are then going to have a structural allocation to China. So that will be really important to further develop the market there and to give a broader swath of investors access to China. We're also really encouraged following the Party Congress and some of the regulatory measures that have come out that we've seen some relaxation of some of the controls there that will just open up the markets, we think, for global asset managers like Pimco. And so that will absolutely be part of our strategy to continue to focus there.
So there has been that liberalization of the financial services industry in China, but at the same time, there has been this attempt to curb financial risk. How then do you balance that?
Well, I think it's a balancing act, but we're encouraged by the signals. We think it'll probably be a slow evolution as they open up markets, as they continue to look at managing their currency and the things that they're focused on. But the signs are encouraging in terms of the JV ownership going up past 50%, and some of the interest in allowing onshore investors in China.
Let's shift now to then the long-term outlook for Pimco in the region, looking at the rise of the next generation, millennials, for example. How much are they factoring into your long-term strategy?
Oh, hugely important. So in general, we're having a huge focus on the wealth management industry. We look at wealth accumulation trends, obviously growing at double-digit rates. We think that will continue over the next 5 to 10 years. So from our business strategy, we've really been focused on putting resources on the ground who can engage with partners to get to individual investors and to help bring them investment solutions. So that's the case in Australia, where we've built a strong team. We've made a multi-year investment here in Asia, ex-Japan, here in Hong Kong, and then in Singapore, and then also in Japan, where we're focused on that market. Millennials are going to be a huge buying source and trend that we want to respond to. And one area that we know that millennials are very focused on is ESG. And this is a big area of focus for Pimco, where you've seen a lot of development on the equity side as it relates to ESG, but frankly not a lot on the fixed income side. This is an area that we've spent a lot of time investing in terms of integrating ESG into our investment process and also creating specific solutions that can speak to that market. We've done that globally, and we've recently launched a fund in Australia as well.
So you're building out your distribution network, I would imagine. You're also attempting to hire more talent. Where are you hiring then in Asia?
In Asia, so it's twofold. One is to engage with our clients and make sure that we bring specialists as well as account managers who can speak directly to clients. So that's been a big area of focus for us across the board. Secondarily is on the investment side, as you might expect. We've had a multi-year plan, which we just enacted this last year, to invest in local Asia resources. We've got a robust team in Japan, in Australia. We have an emerging market team in Singapore. We have our credit analysts here in Hong Kong, along with our China strategists. But we want to continue to build upon that capability. So people who understand local Asia markets, including China, will be a big area of focus for us going forward to respond to the demand of Asian investors who are looking for those solutions, but importantly, responding to our global client base who look at the region here and want to find ways to access the opportunity set.
Any specific offices where you'll be growing your footprint or any new markets that you'll be entering?
I think probably here in Hong Kong and in Singapore, given that's where the focus will be. And then in terms of markets, we'll be looking to take advantage of the opportunity set, China among them.
A lot of money managers are saying we're on the cusp of a bond bear market. Where do you stand on this?
Well, I think it's absolutely the case that we're nearing the end of the credit cycle. We think 2018 will continue to move forward, but certainly there's volatility ahead, and clients should be wary of risks. We would say, though, that there are structural reasons to think that we're in a long-term low interest rate environment. And while rates will go up, we also think that there's longer-term forces that probably negates a really direct and impactful rising rate environment because of demographics, because of the debt overhang that we see. We think a lot of that is frankly priced into markets. So, we are looking at opportunities to be defensive around securities that are going to be most exposed to interest rate risk and actually allocate to either higher yielding securities or those that offer value in that type of a scenario. So we think bonds still have a very important place in portfolios, but again, an actively managed bond portfolio because you've got to navigate around these risks.